Hello and welcome to The Informed Investor. This week, we continue our series on investment intermediaries. The very important link in the whole process from the time that you decide to invest in India's stock markets is the depository. You may not have heard the word depository that often, but I'm sure you've heard the word demat. It's almost like a new word that has been introduced in our dictionary. So what really is demat? How is it important? What does it really mean? To answer all those questions, joining me today is Mr. Gagan Rai, who's been with the depository system ever since its inception back in the mid-90s. He's the Managing Director and CEO of India's biggest depository, NSDL. Thanks very much, Mr. Rai, for joining me.
My pleasure.
Before I actually get you to answer some questions of our viewers, I want you to answer this very simple question of mine. What is demat?
Demat is the process of conversion of physical shares into dematerialized form, that is into electronic form. So like you open a bank account, you put in your money there. Similarly, you open a demat account or a depository account and you put in your shares there. After which you can trade in those shares, you can sell those shares, you can buy more shares, you can have a corporate action in your account itself, which means, for example, if somebody is issuing a bonus shares, then the bonus will also come into your demat account and so on and so forth. This is a very easy way of maintaining your shares and dealing in securities.
Let's take the first question for you.
Hi, I'm Mohit from Chandigarh. My question is, how is depository similar to a bank?
Okay, you did explain. You used the word bank when you answered.
That's
but
right.
If you were to explain it that when I, for instance, go out to invest, one thing I do is I pay money and I buy a product. So how does it work when it comes to a depository, and how is it similar then to a bank?
Okay, I'll answer the second question first. How it is similar to a bank? You open a bank account, you put in your money there. Here you open a demat account and you put in your securities there. The difference is that in banking, the bank is using your funds. The bank is redeploying your funds. In depository, it is like a safe custody. It is like a locker. So a depository account is a bank account with a locker facility, where the depository participant or the depository cannot use those shares without your specific permission, which can be in terms of stock lending and so on.
Okay.
So that's the difference between a bank account and a depository account. Now, if you want to sell securities, then you have to contact a broker. Broker will sell securities at a stock exchange, and you have to transfer securities from your account to pool account of the broker for onward submission to the stock exchange or the clearing corporation.
Okay.
And then the broker gives you the check whenever you have sold, the usual way. If you want to buy, similarly the securities will come into the broker's pool account first, and then he will transfer into your account, and you have to give the money to the broker.
So are you saying, Mr. Rai, when before I decide or when I decide to start trading or investing in India in the stock market, the first thing I need to do therefore is to open a demat account?
That's right.
And who can I open a demat account with? How do I go about it?
Okay, you can open a demat account with any of the depository participants across the country. Now today, they are spread in 1,200 cities at 12,000 locations. So you can go into any of the 12,000 locations and open a demat account.
And who are these depository participants? What kind of entities are these?
They are banks, stock brokers, NBFCs, custodians, and so on.
So as an investor, how do I know that where should I need to look for a registered? Is it there on your website? Or?
Yeah, it is on our website. All the names and addresses of depository participants are on our website. So you have to choose which depository participant is more convenient to you. What are the costs involved? You have to go to him with a proof of identity and proof of address, which is again specified by Securities and Exchange Board of India, and go and open an account.
That's an interesting point you made on cost, because that at the end of the day for every investor becomes a deciding factor. What are the costs? When I go to a bank, for instance, if I open an account, there might be some account maintenance charge or some other charges which are levied on me. When I go to a broker, there is a brokerage fee I pay. If I buy a mutual fund, I pay the distributor a certain amount. But when I open a demat account, what are the charges like?
Okay. Now, when you go to a depository participant, he has to take some charges for account opening. As far as the depository is concerned, what we have done is, we have had a principle that we charge the depository participant and depository participant in turn charges the client. Our endeavor has been that more and more depository participants come so that the competition increases and the charges come down over a period of time. On our part, the NSDL has reduced charges 8 times in last 13 years. And recently, as recent as 1st April 2010, we have reduced the transaction charge on the DP from 5 rupees to 4 rupees 50 paise per debit transaction. And there is no charge for the credit. Even a DP cannot charge anything either for the custody or for the credit.
Okay.
Even a DP can't charge that. That is a
So what you're really saying, to simplify this for our investors, is that when I open my account, the depository participant can take a one-time upfront account opening charge from me. And this, according to you, would vary from how much to how much? What is the range?
Actually, some of the depository participants have come out with schemes like, if you do broking with me, then this is free.
Okay.
Similarly, some banks have come out with schemes that if you do banking with me, have a banking account, then it is free.
Okay.
So it varies from 0 to 200 to 300 rupees.
That's it.
So it
0
could be
to 200, a one-time charge.
One-time charge.
Now, what you're subsequently saying is, my shares lying in that account, there is no custody charge.
There is no custody charge.
Right. And when you say credit debit, just to explain it to our viewers, what it
There is
really
no-
means is,
when
the share comes into my account
Is a credit.
from anywhere,
Is a credit.
I have to pay nothing.
That's right.
It's only when I sell and transfer the share, you are saying it's about 4 rupees 50 paise per transaction, irrespective of the size of the transaction.
That's right. It is a flat charge which we are charging the depository participant, and the depository participant may have his add-on and charge.
Which
you.
is roughly how much? You would have a sense, because the rate charges
it
would
be 15 rupees, 12 rupees, that's it. But there is no credit charge.
Okay.
So which means...
So even
since-
if I'm selling 100 shares, I will have to pay 15 rupees.
That's right. And if you sell 1 million shares also, you pay
Then
50
also.
rupees.
The class on depositories with Gagan Rai continues on the other side of this very short break. Keep watching The Informed Investor.